Good afternoon, everyone, and welcome to Salasar Techno Engineering Limited's earnings conference call for the first quarter ended 30th June 2018. I would like to begin by expressing my gratitude to you all for taking time out to join us today. On the call with me is Mr. Kamlesh Sharma, the Chief Financial Officer of the company, and the Bridge IR Investor Relations team. Before we get into the financial and business performance for the quarter ended 30th June 2018, I would like to give you a short overview about the company. Salasar started its journey in 2006, primarily as a telecom tower manufacturer. Over the years, we have successfully diversified our business into different verticals and have emerged as a strong brand in the sector, expanding our operations in various parts of India. Today, we have supplied more than 30,000 telecom towers since our inception, of various designs of angular, tubular poles, smart poles, etc. Our technical collaboration with Rambol, a Danish company, has enabled us to emerge as one of the key players in manufacturing and fabrication of telecom towers. The collaboration has helped us provide our customers with better designs and lighter weight towers. We are preferred telecom tower suppliers for all major telecom companies and enjoy a sizable share in the market. Today, our installed capacity for galvanizing stand at 100,000 metric tons per annum, and our offering includes steel fabrication and infrastructure solutions for telecom towers, transmission line towers, substation structures, solar module mounting structures, and structures for railway electrification. We also manufacture and provide utility poles to our customers for different uses, such as high mast poles for lighting purpose, smart city poles for telecom plus lighting, stadium lighting poles for sports stadiums, flag poles, and we are also approved vendors for Power Grid Corporation of India Limited, that's PGCIL, and also approved by CORE, that is Central Organization for Railway Electrification, Allahabad. Our business can be classified into four verticals as of now: telecom towers, transmission. Transmission further can be divided into EPC projects, turnkey projects, railway track electrification, and supplies to other EPC contractors. Third vertical is solar module mounting structures. Fourth is utility poles, which include high mast poles, smart city poles, stadium light poles, camouflage poles, and flag poles. Further, as an ongoing endeavor to enrich our product mix, I'm happy to share that we have received and approved status from CORE, that is Central Organization for Railway Electrification, to supply railway track electrification structures to other contractors. Our company is gearing up to sharpen its focus on railway electrification and intends to increasingly start bidding for such projects in strategic alliance with local private players initially. We are gearing up by adding more manpower and building capacities to handle all future railway-related projects. The sector continues to witness upside growth in both ordering and execution, and the company expects growth to remain strong and gain further pace with the increased participation opportunities. We have constantly innovated to provide efficient solutions. Our excellent execution capabilities have helped us gain the trust of our clients. This is evident from the strong repeat orders from our clients. I would like to thank the entire team of Salasar Techno Engineering Limited for their untiring efforts, hard work, sincerity, and dedication in driving the company. Coming to our consolidated financials for the first quarter ended 30th June 2018, these numbers are in line with India Accounting Standards, that is IND AS guidelines. Financial highlights for the quarter. Our focus has always been on improving overall business, and this can be seen in our performance. Our company registered a revenue of 163 crores with a year-on-year growth of 39% from 117 crores in the same quarter last year. The growth was driven by strong performance in telecom, railway overhead electrification structures, and EPC business. The EBITDA stood at rupees 18 crores in Q1 this year compared to 12 crore last year for the same quarter increased by 44% on account of extra business and operational efficiencies. EBITDA margins increased by over 37 BPS in Q1 FY19 to 10.79% as compared to 10.42% in Q1 FY18. The net profit for Q1 FY19 is 9 crores as compared to rupees 6 crores in Q1 FY18. This represents a growth of about 46% on a year-on-year basis. Overall, we see good demand in the industry, and our focus remains on increasingly put our efforts in increasing our market share and providing quality of products and services to our clients. Well, this is all from our side as of now, and we can open the floor for the questions and answers.
Shall we begin the Q&A session?
Yes, please.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star and 1 now. We have a first question from the line of Nikhil Parekh from Dhanki Securities. Please go ahead.
Yeah, thank you, sir, for the opportunity. Sir, I had a few questions. What is our outstanding order book as on date?
It's divided into two segments, actually. If we talk about EPC business, we have EPC business order book of 236 crores. Plus 110 crores for our joint venture of Salasar for railways. We have just received one. We in fact been declared. I mean the LOI. We have not received the LOI as yet, but we have just won one of the tenders in Gujarat for 87.26 crores for railway track electrification on a complete turnkey basis as a EPC business, which will be done again through Salasar joint venture. And that order value is 87.26 crores. And we have a balance of about 24 crores to be built from our last order of 50 crores of Salasar, which is being done in UP. So 236 crores is complete EPC business, which is in Salasar, and 110 crores is what is balanced in Salasar. Other than that, for supplies on account of railways, we have about 17 crores order book. Telecom, we have more than 75 crores. Poles is about 20 crores, and transmission is about 10 crores. So that's about 130 crores for supplies for manufacturing, and about 236 crores on account of EPC. So even if we don't count Salasar as a complete turnover coming to Salasar, we stand at about 365 crores plus minus.
Okay, so this is only our share, 365.
Yes.
Right.
Plus, we'll see out of the 110 crores, about 70 crores is supplies. About 70% is supplies. So around 72 to 75 crores would be supplies, which would come to Salasar indirectly, because Salasar would be supplying to Salasar. And around 25 to 28 crores would be services portion, which will be directly done by the Salasar.
Sir, we had some working capital receivable issues as far as a few projects in UP were concerned. So what is the status on that now?
As far as one of the projects UP PTCL is concerned, which is a pure transmission line job, payments are okay. And we have already finished at 90% of it. Yes, the PVNL, which is a rural electrification project of around 230 crores, we have already billed close to 122 plus, just a minute, 22 plus 26. Around 140 crores we have already built, out of which the receivables are a little late, not because that there is an issue. The issue is only that the fund transfer to this particular Yojana is a little slow from the central government. Basically, we are doing this project under Deen Dayal Upadhyaya Gram Jyoti Yojana. The fund which are being transferred to this particular Yojana are a little slow compared to other schemes. So we have a outstanding of about almost 84 crores on account of this. So out of 148 crores, we have a balance to receive of about 84 crores. So we have received only about 64 crores out of this. But this will eventually come in, next 2 to 3 months.
So this was very helpful. Thank you so much.
Thank you, sir. Anyone who wishes to ask a question may press star and 1 on your touchtone phone. We have next question from the line of Hansraj Singh, individual investor. Please go ahead.
Yeah, thanks for taking my question. Sir, my question is on the working capital side. Is it possible for you to give me the receivables, inventory and payables number for this quarter ended 30th June?
See, on 30th June, we had debtors of about 152 crores and a stock of about 99 crores and bank outstanding at about 101.4 crores.
So you said payables how much?
Payables ka number, just a minute, I'll give you the number for payables also. 50.40 crores payables. So stock is 99 crores, debtors are 152 crores, bank loan is 101 crores, and payables about 50 crores, plus minus.
Okay, sir. Thanks a lot. Thank you.
Thank you. Participants, to ask a question, please press star and 1 on your touchtone phone. We have a next question from the line of Kalpesh Parekh from Prabhudas Leeladhar. Please go ahead.
Yeah, good afternoon, sir. First of all, congratulations.
Good afternoon, Kalpesh. Thank you.
Sir, wanted this year, segment-wise, your outlook as such. I might have missed it. You must have said it in your opening remarks. Segment-wise, how you foresee and what is the overall growth outlook you would like to give?
See, for a complete year, we are looking at, compared to last year, we are looking at a growth of about 25%.
So last year also you started with 25, but you ended more. So this year also we would like to end 25.
I'm always a little bit conservative in my, directions. So we might even touch a little higher than 25%, but 25% is something that we're going to definitely achieve. So we are basically looking at a turnover of about 625 crores plus for the whole year. The major growth is going to come from railways and telecom, plus EPC business, of course.
Mm-hmm.
But solar is going down. Solar, we don't have any significant order book for the reason that solar somehow the sector as such is not giving returns to the properly the developers. So somehow the solar structures we are not taking much orders at the moment. But railway is what we are focusing at the moment.
Okay. But sir, if I'm seeing like this quarter's performance, we have done top line of 162 crore. You're talking of 625 crore. So are you expecting a very somber type of coming quarters as such, or?
See, always second quarter is somehow little somber in the sense that because of rains, a lot of sites are held up, because of rains in Kerala, in Northeast, and so many places. The civil work actually gets delayed, right? Even so the dispatches to the sites get little affected,
Okay.
So that's why I'm saying 625. Probably it will be in the range of 640 something.
Okay. And in terms of raw material things, sir, are we seeing any pressure in terms of any specific areas where we are seeing any inflationary pressure or something? So I'm trying to get the feel on your margins as such.
Yeah. See, in Q1, we had a little pressure in terms of zinc prices and steel prices because there were some orders which were at fixed price from Reliance, right? Because Reliance always gives us fixed price orders, right? And the steel prices and the zinc prices actually went quite high in Q1, which have now softened. The zinc prices have already softened, and we are still executing that order, So imagine doing the same order in Q1 and now doing the same order in Q2. Our margins are slightly better in that order, at the moment compared to what they were in the last quarter. Right now, I feel the steel prices and zinc prices have more or less settled. I mean, I cannot say much about zinc. Zinc might, it might soften a little bit or might even harden a little bit. But the steel prices more or less have settled. And the new orders, whatever we are taking right now, are based on the current steel prices.
Right. So what type of inventory are we sitting on the steel?
Steel in terms of tonnage would be sitting at around 4 tons. How many tons? 4,500? 4,600? About 4,600 tons. 4,600 tons.
So that would be suffice for what, 2 quarters?
No. It's about a month. About a month. About maybe around 40 days.
40 days type of inventory.
45 days, yeah.
And in terms of capex, sir, how are our plans as such now?
There is no capex plan as of now. Nothing. We are fully geared up for the complete operation, so we are not seeing any capex in this coming next 6 to 8 months or even a year.
Okay. So capacity-wise, like we would be having still a buffer capacity of 20-30%, or how it would be?
See, ideally the capacity technically is 100,000 tons, but when you actually manufacture a mix of all products, I mean, even if you end up manufacturing like 80,000 tons, it's a good, I would say, good utilization of the available capacity. Because, see, 100,000 tons is calculated on a particular size of material, a particular type of material, right? But when you manufacture a mix of all sort of, like you make tubular towers, you make smart poles, you are making poles for transmission, you're making poles for telecom, you're also making angular towers, and we are also making smaller structures for mounts and so many things. So about 85,000 is something is what is maximum achievable from this existing capacity.
Okay. So at least for a year as such, or more than 6 months, probably 6 months to a year, probably we may not see any constraint on that front, at least on the capacity.
No. Not at all.
At last minute, you were...
Would you like to come back in the queue?
Okay, sure.
Thank you. We have next question. Anyone who wishes to ask a question may press star and 1. Participants, kindly restrict your questions, 2 per participant. We have next question from the line of Abdul Karim from HDFC Securities. Please go ahead.
Good afternoon, and thanks for taking my question. I wanted to know how the new order books is looking and you are expecting. And apart from telecom and railway and other area like solar and other things are looking.
Mm-hmm. See, as I said, solar is not looking very good, right? There are 2 reasons for that. One is that the basic structure which was used in solar has been completely done away with, and they're using more of pre-galvanized structures of lower thicknesses of a higher strength material, which is only a forming job. I mean, and our job in that is not much. So we prefer taking material which is hot dip galvanized and a rolled material, so that we can get that done. But as far as other businesses are looking, Railway is looking most promising at the moment. Telecom is looking very good for next at least 1.5, 2 years. Telecom poles are looking very good. Transmission line poles are looking very good. EPC business as such is looking very good. Out of 236 crores of order book, we have still about 100 and about 150 crores of orders for which we have just started the work.
Okay.
Yeah. And in fact, out of that, about 90 crores is something for which we have still not got the LOI. I mean, we are just L1 there. Okay. We are waiting for the LOI from different state PHC boards. And other than that, we have won a tender for telecom in Nepal also, which is of about 14 crores, and out of which supplies would be about 7 crores, and 7 crores would be services part. It's a turnkey project for Nepal telecom.
Okay. Thank you.
Thank you, sir. We have a next question from the line of Jehan Bada from Nirmal Bang Securities. Please go ahead.
Hi, sir. Good afternoon.
Hi, Jehan. Good afternoon.
Sir, on the railway front, what is the pipeline for orders, in the next 6 months that is visible?
See, right now, for supplies alone, we have an order book of 17 crores with confirmed orders in hand, right? Which are to be executed over next 1.5 to 2 months, 3 months maximum, right? After that, we have Sikka Salasar of 110 crores, out of which 70 crores is supply, out of which the structures would be about 35 to 40 crores, right? That's also visible clearly. Beyond that, we have commitment from companies like L&T, Tata Projects, Kalparu, KEC, that, see, right now everyone is in a hurry to take deliveries. So we are booked for railways at least, we are booked for at least next 2 to 3 months. And then going forward, when these orders which are in hand are being delivered, we'll grab more orders from these companies. They're sitting on huge order books. So, I mean, taking orders today for railway supplies is not a challenge at all. Rather, they're looking for good vendors who can actually do it.
Okay. Right. And so even if the competitive intensity for government railway projects were to increase, you would not be affected that much because you would be you would be supplying to other OEMs as well. So that is what you're saying.
Yes. I mean, this is a basic structure which is required for electrification. And major EPC players, they don't have their in-house manufacturing capabilities for railway structures. So we are very well placed in that sector.
Okay. And sir, for this quarter's revenue, if you can break it up into different segments.
Okay. Revenues, for this quarter, railways was about 8.5 crores. Telecom was about 95.5 crores. Transmission was 17.5 crores. Solar was 3.25 crores. Total tonnage we have done this quarter is about 17,700 tons of about 126 crores.
Okay, sir. That's it from my side. Thank you.
Thank you.
Thank you, sir. We have a next question from the line of Parth Kotak from Investment Trust of India. Please go ahead.
Hi, sir. Firstly, I would like to congratulate you on good set of numbers.
Thank you.
Sir, I just want a clarification that, you've said that the railway business is going to go up or expected to go up for the following year. So, do we expect the cash conversion cycle to actually increase from the current approximately 90 days?
No, it should rather decrease. When we would be supplying to railways, the payment terms with all these companies are 30 days net, right? So even if we take into account the manufacturing time and the inspection time and everything, and even if those 30 days are pushed to 45 to 50 or 60 days, the payment cycle would rather improve overall.
Okay. Okay. And sir, you said that you also supply to the EPC contractors who are doing work for the railway. So would that be a major portion of the railway book, or
yes,
major portion?
Yes.
Okay.
Yes.
All right.
Yes.
And sir, apart from the business side, I just want a little bit of clarification on the investment in Rudrabhishek, some SME company. Is there some business interest or kind of an interest which you're looking apart from the investment?
See, I'll tell you, this is a very small investment we have done for a long term. The main reason behind that is that Rudra Abhishek are basically, they're designing smart cities. They are consultant to smart cities. We have just started work in smart cities in the sense that we did 50 smart poles in Visakhapatnam, which has been handed over to L&T. Rudra Abhishek, I think they're doing some 8 or 10 smart cities right now. Right, so it's a strategic investment, a small strategic investment, which would actually give us some extra inputs in the sense that whatever is happening in the field of smart cities, what are the requirements, what are the, I would say, the norms which are being set by the government or being proposed by the consultant, we would have better clarity and inroads to that. So it's that kind of a, and in the overall picture, it's a very small investment as such.
Correct. That's all from my side, sir, and thank you for taking my question.
Thank you.
Thank you, sir. Anyone who wishes to ask a question may press star and 1 on your touchtone phone. We have a next question from the line of Kalpesh Kothi from Valentis Advisors. Please go ahead.
Hello. Good afternoon, sir.
Good afternoon. Yes.
Sir, I'm not able to understand how you able to, get the info why investing in the Rudra Abhishek. You have a very small investment. How you get the access of the info from the company then?
See, no, info in the sense that, when we have invested in consultation with the management, right, and we have good relationship with the management. We have been discussing few projects earlier also before making the investment into Rudra Abhishek. Definitely when, they are into smart city business consulting, the inroads what we can get in the sense is not that we can have any say in the tenders or anything, right? That's very clear.
Then will be the lead to, inside info or a conflict of interest?
No. We that's what I'm saying. I mean, it doesn't lead to any inside info. It is just that we can get the flow of things, what's happening in the smart cities. How many more smart cities are coming? How many more smart cities they are consulting? What are the norms which are being set so that we can get ourselves prepared for the same?
So how the Rudra Abhishek going to benefit from the out of it?
Rudra Abhishek, I'm not sure, but we definitely are.
Okay. Thanks for clarification. One more thing, I seen your operating margin has fallen drastically this quarter. So, what's the reason? Is it because of the sharp increase in raw material prices?
Yes, the raw material prices, of course, did play their part. And so did the book debtors and the finance cost also.
So how the things has, because of the, we have holding some inventory. And you also said we are, holding almost 40 days inventory. So how the thing will be in the this last 2 months?
In terms of operating margins?
Yes, sir.
See, the operating margins during this quarter have slightly improved in the sense because the zinc prices have come down by almost, I would say almost 20%. It had touched to 264 last quarter and they're down to 200 rupees a kg, So that would, of course, give us slightly better operating margins.
Okay. And so during the quarter, how much revenue we book from the Geo order?
From the total telecom, we did about 95.5 crores, out of which Reliance would have been, just a minute, I'll just get those figures. Reliance, sure. Do you have? I think more than 50% would be Reliance, as far as offhand I can tell you.
And you're out of 75 crore of telecom order book, is completely Jio?
No, Jio is about 45 to 50 crores, and balance are others.
So this 50 crore will be executed in Q2?
Not completely. Maybe about 80% would be completed. Maybe about few crores would be remaining for Q3.
Okay. And sir, how the railway order bidding is pan out?
See, there are two things which we are doing in railway, as I mentioned. One is that we are doing complete EPC job in Sikka Salasar, which is a joint venture of Sikka and Salasar, wherein we have a order pending from our last order of about, which is to be executed, is about 24 crores. Plus we've got a 87 crore, we've just won a tender of 87 crores in Gujarat. So that's about 110 crores is what is pending in Sikka Salasar. Other than that, we do supplies to EPC contractors who are doing work for railways, right? For which we have an order book of 17 crores as on date.
Right.
Plus, we are expecting more orders. As and when we execute these orders, we'll get more orders. I mean, it all depends how fast we complete these orders. I mean, companies are sitting with the orders to, share the orders as soon as we deliver.
Right. So what's your guidance for the full year in terms of volume?
The tonnage or the railway?
Yeah, tonnage, sir.
We should be doing close to around 72 to 75,000 tons of manufacturing.
Okay. Thank you, sir.
Yeah. Thank you.
Thank you. Anyone who wishes to ask a question may press star and 1 on your touchtone phone now. Participants, to ask a question, please press star 1 on your touchtone phone. We have a next question from the line of Jay Tejwani from AQF Advisors. Please go ahead.
Good afternoon, sir.
Good
Thank you for taking my question. Sir, out of the 75,000 tons that you guided for, how much was the production in first quarter?
In first quarter?
Yes, sir.
17,700 tons.
Okay, sir. That's all from my side. Thank you.
Thank you.
Thank you. Participants who wishes to ask a question may press star 1 now. As there are no further questions, I now hand the conference over to Mr. Shashank Agarwal, Joint Managing Director of Salasar Techno Engineering Limited, for closing comments. So over to you.
Thank you. Since there are no questions, I think I would like to close this meeting. And I would like to thank everyone once again for getting into the phone call. The scenario in infrastructure is looking pretty good in the times to come. The growth has just started, I would say, and we have a long way to travel. I hope everything goes well, and we are looking at a good year ahead. Thank you, everyone. Thank you.
Thank you very much, sir.
Thank you.
Ladies and gentlemen.